Hi guys, and welcome back to another video on Financially Fluent. I am your host, Jacqueline Mutuma. I hope you have your book and your pen with you because as you know that this is the channel where you come to learn everything about finance, and you cannot just learn by listening. Okay, you have to note down some points somewhere so that you can be able to refer to them in future, or when you want to maybe pursue some of the things that we're discussing about. It's good when you have your short notes. All right, so without further ado, let us get into today's video. And as you have seen from the topic, we will be discussing about Saccos. We are going to know what Saccos are, how can you join a Sacco, what are you supposed to do before you can join a Sacco. And I know that you've had so many terms that are related with Saccos. You've heard about BOSA accounts, FOSA accounts, deposit-taking Saccos, and you're wondering, what are all these terms? What do they mean? So that is why we are here today. We are going to learn about Saccos, and at the end of this video, towards the end, I am going to show you a strategy that you can actually use if you want to grow your wealth faster using Saccos. All right, so let us get into it. What is a Sacco? The full definition of a Sacco is a savings and credit cooperative organization. That is what the term Sacco stands for. All right, so from the term, you can actually see that a Sacco pulls the investors or the members' savings together, and out of those savings, they give out as loan. Credit is a loan. So they give out as loans to the members themselves. The loans are repaid with a fairly small interest, okay, a very fair interest, and that is how the Sacco is able to grow, okay? So they are mostly preferred than your traditional bank because when you're taking a loan with a Sacco, the interests are pretty small and they are also easily accessible than your traditional bank. All right, so how do Saccos work? Let us look into how Saccos work. For one, you join as a member, and you join as a member by filling a form. There's a form you'll be given to join as a member, and then you have to pay a registration fee. All right, that is if you're joining for the first time. And then number two, you start saving regularly. Those are called monthly contributions or shares. Okay, so shares is one of the terms you will hear every now and then in a Sacco. Those are just the monthly contributions that you as a member, after you have already joined, you make each and every month. All right, and then number three, your savings and dividends, which are from the Sacco's profit. And as I said, most of this profit that the Sacco gets is from lending out loans to its members, because those loans will be repaid at an interest, and at the end of the year, regarding on the amount of savings that you have, then and also regarding on the percentage that they are using to issue the dividends, it will matter, or it will dictate how much of the dividend you're going to get. So depending on your savings, depending on how much profit the Sacco has made, okay? And then number four, you can borrow against your savings, and most of the times it is usually up to 3 times. In most Saccos, it is 3 times. In some Saccos, it is 2 times, but most of the Saccos that I've actually heard about, the loan multiplier is 3 times. That is how many times are you able to borrow against your savings, okay? And then number 5, the loans are low interest and flexible, and often, or most of the time, they do require guarantors. All right, so when you are selecting a Sacco that you need to join, select a Sacco that you know about 2 or 3 people that can actually guarantee you whenever you need a loan. We will see that somewhere as we progress on. All right, so the next topic I'd like us to look at is what are some of the key Sacco terms that you as a member should know. And as I said, the first one is shares. Shares or deposits, those two mean the same thing. Those are your monthly contributions, okay? And then number two is dividends. Dividends is your share of the Sacco profits. That is what we refer to as dividends, which you will get at the end of that Sacco's financial year, okay? And then guarantors. Who are guarantors? Guarantors, these are people who vouch for you if you need to take a loan, okay? That is those are the people that we are calling guarantors, because as we said, some of these Saccos have a loan multiplier of 3 times, okay? A loan multiplier is how much of your savings are you able to borrow. So if you have savings of 50,000 Kenyan shillings, if the Saccos multiplier is 3 times of your savings, you can actually get a loan of up to 150,000. But then remember, your savings are only 50,000. And the only way the Sacco can be sure that they will get their money back in case you default is by you having guarantors. So you're going to need people who will actually vouch their savings for you to be able to cater for the 100,000 that you don't have, so that the amount can add up to 150,000 that you'll be able to be given as a loan. Those are guarantors, all right? And then as the other term that you need to understand is loan multiplier. And this is what I have been speaking about so much. This is how much you can borrow versus how much you have saved. And as I said, it depends. It varies with the Sacco that you're in. Most of the times it is 3 times. In other cases, it is 2 times, okay? Depending on the Sacco you are in, okay? And then let us look at some of the benefits of investing through a Sacco, okay? Number one is higher returns. Saccos do have higher returns than banks, and this is through the dividends. The dividends can actually go, let's give them an average of 10 to 15% per annum. So you can see that return is actually pretty good as compared to maybe, let's say, fixed deposits accounts. Most of them are usually around, let's say, 12%. But for the Sacco, it actually varies. If your Sacco performed very well and they have lots of profits, then that means your dividends for that financial year will be higher. Likewise, if the Sacco did not perform very well, or maybe there was some mismanagement, or as a Sacco you decided to embark on a project and the project has not yet started to yield the returns that you expected, that financial year the dividends might become a little bit less. But most often Saccos do have a good dividend at the end of the year. The second benefit of investing through a Sacco is the low interest rates. Some Saccos do offer loans at 1% per month. That means annually that is 12%. So you actually get a loan that you'll repay at 12% per annum. If you compare that with the interest rate that banks usually offer for their loans, that is pretty low, okay, and very accessible and payable. And number three, the third benefit of investing through a Sacco is that it encourages saving discipline, okay? Because you have to do the monthly contributions so that you can be able to build your wealth. The fourth benefit is ownership and voting rights. You actually have a say in how the Sacco is run. You as a member, you get to vote for the people, the management team, and you also, there's that ownership. You as a member, you have that ownership in the Sacco, okay? So the fifth benefit of investing in a Sacco is that it is community driven. Members support each other, as we have said, and they do this through guaranteeing, through the guarantors, okay? Let us look at some of the risk and considerations to look out for when you are selecting a Sacco. And number one is beware of poor management. You are only supposed to join a Sacco that is regulated by SASRA. And how do you know if a Sacco is regulated by SASRA? You're supposed to visit the official SASRA website, that is www.sasra.go.ke. You'll be able to see somewhere written publications. Under publications, you'll find licensed Saccos. When you click on that icon, it will bring you all the regulated Saccos that we have in Kenya. Okay, so that is the first thing you need to look out for under the risks when you are selecting a Sacco. And then number 2 is loan default by others. You should know the person that you are guaranteeing. How well do you know them? You should guarantee people that you are sure will be able to return, because if these people do not pay, then the payment will actually come from your savings. The moment you have guaranteed someone and you have put the signature and the amount that you are actually guaranteeing them, remember that this amount is coming from your savings. If that person does not pay, if they default, then the payment will actually come from your savings in accordance to the amount that you actually guaranteed them. Okay, so know that there is loan defaulting. When you are guaranteeing someone, be sure that you know them well, and in case of anything, you know where you can be able to find them and all that. Okay. And number 3, sometimes there could be delayed dividend payouts. So you're supposed to investigate the Sacco's financial health, see how they have been performing the past years before you decide to actually put your money there and invest with them. Okay, and also some things do come up. There are good Saccos that are out there. As I said before, as a Sacco, you might decide to embark on a project. Embarking on a project will take much of your profits. And if it is a business, you need to understand that the business might not perform so well immediately it has started. For a business, you need to give it time so that it can be able to grow. So if your Sacco has decided to embark on a project, unless it is a viable business and you know that in future the business will actually yield returns, you need to be aware. You need to be aware that there are times dividends might delay. So you need to check and see, why have the dividends this year delayed? Is it a sign of poor management? Is it something that needs to be looked into? And so on. Okay. Another consideration that you actually need to put in mind is that Saccos have limited liquidity. You cannot just access your money that easily as we can in banks. Okay. So let us move to something else. And how are you supposed to choose a good Sacco? So number 1 is check if it is licensed by SASRA. And number 2, review the dividend history. As I said, you need to see if they are consistent with their dividend history. And then number 3 is you need to check the loan products and rules. Are the terms member friendly? Are they something that you are comfortable and okay with? And then number 4 is you need to check the reputation and transparency. That is, check reviews, and also if you can get members' feedback before you can actually start investing with them. And then number 5 is the tech and convenience. Do they have an app? Do they have mobile money, etc.? But on this point 5, it can vary, because for a BOSA Sacco, as we are going to see here, they do not have those banking-like services. So on this point 5, it depends. If you need something that is has an app or mobile money, then you'll need to go for a FOSA Sacco account. I am going to explain what that is in a while. So number 5 can be very flexible. Some of the types of Saccos that we have in Kenya, number 1 is the deposit taking Saccos. Number 2 is the non-deposit taking Saccos. Number 3, we have occupation-based Saccos. These are Saccos that are based on the members are from the same profession. Maybe teachers, doctors. So that is an occupation-based Sacco. Number 4, we have a community-based Sacco. These are people that are in the same area. And then number 5, we have open membership Saccos. These are open to anyone. Anyone can join regardless of profession or location. Okay. So I'd like us to see the difference between a BOSA and a FOSA Sacco account. And then from there, we can now move on into how you can actually use a Sacco to grow your wealth. Okay. So what is a FOSA account? FOSA stands for Front Office Service Activity. Okay. And this is the banking side of a Sacco. And then BOSA stands for Back Office Service Activity. And this is the traditional side of Saccos. So when I say banking side of a Sacco and traditional side of a Sacco, what do I mean? This is what I exactly mean. Let us look at some of the advantages and disadvantages of a BOSA and a FOSA Sacco account. A BOSA account, the advantages include they have high dividends, they encourage saving, and the loan multiplier effect. For a FOSA account, the advantages include easy access to cash, banking convenience, and mobile/ATM banking. Okay, so that means your money is highly liquid. You can access it at any time. What are some of the disadvantages of a BOSA and FOSA account? For a back office services activity, the disadvantages include they are not liquid. You cannot withdraw at any time. They need guarantors for you to be able to access a loan. For a FOSA account, a FOSA Sacco, some of the disadvantages are they have lower or no dividends. They might actually lack dividends. And then it is easy to overspend because you have money at your hands. You have an ATM card. You can just withdraw your savings at any time. And then they may charge more fees. They may actually have more fees. Remember, in a BOSA account, the only fees that you'll undergo is the interest that you're going to pay on the loan that you are borrowing. Okay. But for a FOSA account, there may be other charges that are involved. Now that I have told you what a BOSA Sacco and a FOSA Sacco is, when you get to their offices, maybe you want to now open an account, some of the questions that you can actually use so that you can be able to distinguish the type of Sacco it is are, number 1, do you offer front office services like ATM and mobile banking? You can also ask, can I open a salary account with you? Another question you can use is, do you provide deposit taking services? And another question, is your Sacco regulated by SASRA? Yes, you can actually ask at their offices, at their reception. You can actually ask, is the Sacco regulated by SASRA? But asking is not enough. You also need to do your own research to know if they are regulated. A FOSA Sacco will most likely say yes to all of those questions. Okay, so remember I said a FOSA Sacco is regulated by SASRA, a BOSA Sacco is regulated by the Ministry of Cooperatives. Okay. As I said, you can also get clues from their marketing strategy. A BOSA will focus on high dividends, member savings, and community empowerment. For a FOSA, they will focus on banking convenience, ATM cards, apps, and customer service. So now we have described what a Sacco is. We have seen how you can be able to join. We have looked at some of the risks and considerations that you're supposed to have in mind before you open your Sacco account. And so now I want us to look at the most important topic that I know you have been waiting for so much. And how can you be able to use a Sacco to actually build wealth or grow your wealth. Okay. So the first thing that you need to do is you need to have a savings plan. You need to know how much or according to your financial goals. So remember, we spoke about financial goals, and remember we said that when you are saving and investing, you're actually doing that with a purpose. So that purpose that you have, how much are you aiming to attain so that you can be able to make that purpose or that goal come alive for you? If it is opening a business, how much capital do you actually require? If you need, let's say, 100,000 for that business, so you can join a Sacco with the intent of saving at least, let's say, 40,000, and then this 60,000 you'll actually be given as a loan. So you'll apply for a loan, because if you save 40,000 and the Sacco that you have joined has a loan multiplier of 3 times, so that will be 40 times 3, that will be 20,000. And as long as you can be able to get those guarantors, so are you saying that you'll have the capital that you actually need to start that business? So the first thing is for you to start saving after you've already known what your financial goal is. According to that financial goal, now start saving when you have a clear mind of where you're going. After you have saved, number 2 is, as I said, use the loan multiplier to borrow cheaply. Remember, I said getting a loan in a Sacco is way cheaper than actually getting a loan through a bank. Or not only a bank, but many other platforms that actually do offer loans out there. But I believe the cheapest is a Sacco, and then after Sacco, then maybe bank, and then all those other platforms can come in. So, and then number 2 is use loan multiplier to borrow cheaply. And then number 3 is you need to invest that loan wisely. So how can you be able to invest a loan from a Sacco to be able to make wealth? Number 1 is you can start on a project of buying and reselling land. So how does this work? Let's say, for example, you have been saving 5,000 monthly. At the end of the year, you have 60,000, okay? There's a land you have seen somewhere, and it's, let's say, 150,000. So if the Sacco you are in, they are offering loans using 3 times. They're giving you loans based on your savings. Against your savings, they're giving you 3 times. So you have saved, you have 60,000, okay? So 60,000 by 3, that is 180,000. 180,000, go find a land. Find a land that you can actually purchase at 180,000, and then hold it. You can decide to, maybe as you hold it, you can also decide to maybe do some farming on it. That is extra income. But even as you hold and wait for it to appreciate, do not let it just lie down idly. You can think of planting some trees, plant fruits like the mapera trees or treetop trees. Actually, those seedlings, the seedlings, I believe, are about, I don't think they even go more than 100 Kenyan shillings to actually get a seedling of a tree or mapera. Plant trees in that land, so that even when the land appreciates, it's actually going to cost more because you have actually planted trees. And so for you to be able to understand what I'm saying, I created this. I hope you can see. So this is a 3-year projection example for land investment using a Sacco. Year 1, you have saved 60,000, okay? And then you have taken a loan 3 times, that's 180K. The land value after, let's say, 2 to 3 years, you're supposed, here I said wait for 2 years so that the land can appreciate. So total value, I put a dash here because we are going to get the total value at the bottom. And then, so that is year 1. You have been saving. And remember, when you take a loan from a Sacco, your savings are not reducing. Your savings are still there and you'll still earn dividend even if you have a loan. Okay? So that is year 1. Year 2, you now add, you continue saving. Let's say you've not even increased your savings. You're still saving 5,000, 5,000. So in year 2, how much will be your savings? So that will be 60,000 for year 1. Just because you have a loan doesn't mean your savings have reduced. You still have your savings because you're also still repaying the loan. Because this loan you actually repay on a monthly basis. So you still have your savings. Year 1, you had 60,000. Year 2, you have an additional 60,000. So how much do you have? You have 120,000. 120,000, let's say by year 2, you've already finished paying the first loan that you had. You decide, now let me take up another loan. You take up another loan 3 times of 120,000, that is 360,000. With 360,000, you buy your second plot. So now you have a plot. You have plot 1. You have plot 1 somewhere that is appreciating. And remember, you also built trees in that land. Now you have purchased another land. And because this time round you have more capital, you're able to find a better land that is in an urban area and a place where it is developing. Okay? So you get your second plot. And then now in year 3, you decide you won't take up another loan. So now it is time for you to reap back. After 2 to 3 years, the first shamba that you had somewhere, it has already appreciated. You bought it, let's say at 180,000. Let's even say it has appreciated to something like, because remember this land also has trees in it. Even if the trees have not grown to full maturity, they are still growing. So let's say the land appreciates to around 400k. And then there is this second land which was better, at a better place, at a structure is good and is urbanized. So this second plot even gives you, let's say, like you bought it at 360,000, that is roughly 400. Let's say it appreciates to around 400k in, not even 400. No, you bought it at 400. It appreciates to 700 or 800,000 after 2 to 3 years. So let me ask you, now you decide to resell. You have resold the first one at 400, the second one at 700. That is more than $1 million that you've actually made through a Sacco. And remember, you have already paid your loan. So let's say you sacrifice and you press yourself for those 2 to 3 years. It might be a little bit draining because you're still paying the loan. But look at this like in a long-term perspective, and it's not even such a long time, because so look at this at a long-term perspective. Even though you will struggle a little bit for the 2 or 3 years in terms of loan repayment, look at the yield that you are getting after 2 to 3 or let's say even 4 years. You have made a profit of, let's even give it a minimum amount of 500,000. So that is the first way you can be able to use your Sacco to actually build wealth faster. The second way you can actually use a Sacco to grow wealth is by boosting a hustle. It can be your main hustle or a side hustle. There are some bonus smart tips that I'd like you to put into consideration. When it comes to a Sacco, make sure that you are borrowing for investment and not consumption. And then number 2, reinvest your dividends so that the compound effect may be able to make your investments to actually grow faster. And then the third thing is use Saccos to leverage opportunities that you could not attain quickly if you were just saving alone. Because as you can see, Saccos are really good. They are really good because of that advantage of you getting a loan up to 3 times of your savings. So if you have a plan, you know you require a lot of capital, find a good Sacco that has people that can actually guarantee you. A mistake that most people do is you join a Sacco where you don't know anyone. So whenever you need a loan, you start getting it becomes hectic for you to get a loan because you don't have people that can actually guarantee you. Make sure when you're joining a Sacco, there are at least 2 or 3 people that you know have been in that Sacco. They have a good credit score with that Sacco, and they are willing and able. By able, I mean that their savings they have reached the limit that you actually require for the loan that you want to apply for. So I want you to understand one thing, is that Saccos are not just saving tools. They are actually wealth accelerators, but if you borrow with purpose. Okay, so this is the end of today's video, guys. I hope you have a clear understanding of what Saccos are. Let me know in the comment section. Are you in any Sacco? And if yes, what has your journey been like? And if you have not yet joined any Sacco, do you think that a Sacco is something that could work for you? Is it something you would want to join? And if it is, remember to follow the steps that we have spoken about so that you may be sure that wherever you are investing your money, it is a safe place. Okay, so yeah, that is it for today. In the next video, we'll be discussing about how you can actually leverage the loan from Saccos to build an agribusiness empire and be able to even multiply your wealth way faster. Okay, so I'm going to do an episode on how you can be able to use Sacco loans and farming, and how you can be able to join those two to accelerate your wealth. Remember to subscribe to the video if you to the channel if you have not yet, and also leave a comment and share this video to as many people as possible. Let us make sure that financial literacy is something that gets to everyone out there. So until next time, bye.